Hey everybody, welcome to your weekend review for the week of Monday, April 10th, 2023. And oh, what a week it was. We started off the week down 12 basis points to start the day. Stocks were down 30 basis points early. Yields dropped modestly last night as Treasury trading got underway in Tokyo, but then held almost perfectly flat until hitting European hours and holiday closures. After about 4 hours off, Treasury trading resumed and volatility increased modestly. A lot of that had to do with illiquidity. This week we'll offer a buffet table of economic data, most importantly on the inflation front. Wednesday brings the CPI, which will be followed by Thursday's release of the PPI, while Friday will wrap up the inflation fund with the University of Michigan indices. CPI is expected to come in at 5.1 annual rate, which is quite a bit of a drop from its previous 6% tally. That mostly has to do with the number it's replacing last year as opposed to the actual cost of goods coming down, which is kind of a problem. And the 5.1 CPI rate would allow the Federal Reserve to sit on its hands at the current 5% Fed funds target rate and allow that to roll off of its balance sheet to continue to put pressure downward on the amount of credit in the economy. So while the Fed futures are predicting a 25 basis point hike on May 5th, this time out, some people believe the Fed will pause owing to all of the banking turmoil as of late. We have had 5 Fed speakers on tap this week. 4 of them voters, as well as Fed minutes from the March meeting on Wednesday. So a lot of stuff coming this week. Zillow showed home prices increased 0.9% in March, highest since June. It's up 3% year over year and down a little over 3% from its peak. Like I said, Fed fund futures are turned a bit more hawkish after Friday's job report. Bonds today got caught up after an unconventional holiday weekend, a short half day on Friday, and a full day of trading in the U.S. despite Europe being closed. MBS underperformed and Treasuries weakened modestly as of the 3 p.m. close. Even with today's full session, volumes were still well under 50% of the norm. That doesn't mean that we should dismiss the modest weakness as irrelevant, but we'll defer to tomorrow for more accurate pre-CPI predicting. At the end of the day, we ended up being flat on the day, landing at 100.75, which puts us in this range right here between the light blue 200-day moving average, which is at 101.06, and then just above that thick black Fibonacci S1 retracement line at 100.758. So it's right around that line. So we have a range there kind of set, and then you have another floor at 100.573. So tomorrow will be a better predictor of what people are thinking for CPI.